Just to give you a quick preview on MACD divergence, we're going to cover the MACD divergence now. And what we're going to do is slides beyond this one is we're going to actually take this indicator out of here because it's effectively useless when placed on the chart. It's really not an effective indicator at all unless it's used in this combined formula here at the bottom. And we're also I typically don't use the histogram because I can visually see the separation between the blue and the red lines here in the lower window. But if you have a software that gives you the histogram and the MACD both in the same window, then you're not going to take up as much space in the candlestick section of the chart, because ultimately I like to see as much as I can of this of the candlesticks and then the main chart layout. A divergence is effectively this. You see here how price has been trending upwards, and it has been making higher highs in a very aggressive trend, and then price pulls back here and makes an aggressively higher high. When we look back here at MACD, we're also moving higher very modestly, and then MACD begins to slow down as price here is even moving at a fairly rapid rate, but MACD starts to slow down, also kind of showing a bit of an overbought situation, but forms a high here which corresponds with the high in price here. And now watch this. You see here how price is moving higher above this high, so price is making higher highs. But MACD has made a high that corresponds with this high. However, the difference is that in this indicator, price is now making a lower high. The MACD makes a lower high, and what we call that is a divergent characteristic. So the MACD is making lower highs while price is making higher highs. They are diverging from one another at this stage. And a way that we can use this in our trading is if MACD is making a lower high while price is making a higher high, we can anticipate that at some stage we may see price start to follow MACD as MACD leads the market lower, and we may start to see a move be initiated that starts to move lower. And this here is on a daily chart. And what we're going to do is, as we move forward, we're going to look at it on different time frames. That's a quick overview, and we're just going to get into a little bit more information before we move forward. So we're looking at MACD divergence examples, and divergence is simply a fancy term for moving in opposite directions. A positive MACD divergence is when price action is making lower lows, or the trend is moving lower, but MACD is making higher lows. If price action is making lower lows and MACD is making higher lows, then we anticipate at some stage that a up price move may start to take place. Here's an example. We see price has been trending downwards, and we've had a nice retracement off this bottom. Then price makes another go at the lows. This is a very modest down move, but I have taken a shot of this for a very specific reason. Price is moving lower, although not much lower, but MACD has pulled back during this retracement. The subsequent down move has not pulled MACD down to be lower than the low of the previous move. In fact, it makes a higher low, and then we are followed by an up move. Now I want you to look at this. What about support and resistance? You see this support here? If we were to draw a line across here, we saw two attempts for the market to move below this significant low, and it did not hold. You see how price closed above? That, combined with MACD divergence, has led to a significant up move. All right. We're not going to be easy on you now. We're going to start to combine other components that we have learned in previous sessions, and we're going to start to bring them and introduce them into what we're learning now in the new section. As we see, an up price move follows, and it's a very generous one at that. We see a nice 900 pip move as a result of this divergence on the daily chart. Now we're looking at a 60-minute chart. We see price moving lower, and MACD comes down here and makes a low. We have a retracement, and price makes a spike lower below the previous lows, but MACD is moving higher at this stage, and therefore leading a potential up move, because price could conceivably continue down. But as MACD is moving up, we see that there is a momentum shift that is occurring here. And the momentum shift comes to fruition as we see a release in price and a failure of the sellers to follow through, and an increase in buying power, ultimately forming a head and shoulders formation, which we're going to cover in a later section, and a generous up price move. Here is a positive divergence as noted on a 15-minute chart. So we're looking at different time frames for a reason. We see an intraday down price move, and you see here how we have a date change. Price consolidates into the following day. The following day, price makes another down move while MACD is diverging, makes a higher low, but price fails to hold below the previous day's low, and then price action or flows from the major institutions now start to come in and move upwards. And again, it's about watching flows. And here, price held below for a while, and it was quite bearish as long as it was holding below 2,800. But then price released upward, and we see here that MACD has led the move. This black line is in here just to show you the divergence between this low and this low, and this low and this low, and how they're moving in opposite directions. The argument can be presented that they're actually moving together. It's a convergence, that they're actually, they're moving together. But we simply state, to keep it simple, we're stating divergence in this case. Looking now at a 60-minute chart, how price has been trending down, making lower highs and lower lows. Price trend is actually slowing down as we start to make lower lows here, and then modestly lower low here. Price even holds below the previous low. MACD is diverging. It's easing off and neutralizing toward the waterline, and diverging, and price releases upwards. You can see here how we have to incorporate a multitude of tools and factors in order to trade this. You don't want to trade this standalone, just on a divergence alone. You want to combine all of your other market knowledge that you're acquiring through this course and applying it to the price action scenario. So for example, we see here, this is very interesting, price actually holds and trades below this previous low for several hours, and before London opens, or actually before. What happened here was, this is actually the UK economic report that happened here at 4:30 a.m. EST, or 1:30 a.m. PST, and price just held below and consolidated before an economic report came out, and we had a state of divergence, and then price came back up above these lows, and once it decidedly came back above these lows, then of course we saw price moving very generously in the opposite direction. So we saw what we'd see is through the price feeds and news feeds, we'd actually see a real shift, significant shift in flows. Looking again at another 15-minute chart, you see this deep retracement right here. Typically, the deeper the retracement, the higher the probability of a divergence in MACD. But there's two factors. I want to bring in another factor that also exemplifies this point of the deep retracement. Do you see how flows contributed to this deep retracement? Well, now, if price wants to make a new low from this point within the same trading day, as we see here, we're in the same, effectively in one trading day down here. Price comes down, tests the intraday previous day / previous day high, actually intraday high, falls, and for it to move from 2460 to hold and trade below 123.90 and change, that's a significant move, and it's quite a task, particularly this late in the session. So price fails to hold below, not enough flows for follow through below that specific price point, as traders are eyeing that price, and there becomes late in a session there becomes very little commitment of traders to actually take price below that point and hold it, because there's a lower probability that their trades will carry forward and continue to hold below that point in later sessions. As time elapses, probability shifts against them. Therefore, you get very little commitment, and usually it's the inexperienced traders that will try taking it below, or it is experienced traders picking up fills here to take price in this direction. And this once again plays off of and exemplifies our discussions on support and resistance here. All right, and we see this is a good opportunity for the major buyers in the market to pick up some profit from this move, and also to get into positions as price moves back into this consolidation. And again, we have our state of divergence. Looking now at a daily chart, and this is a lot of time we see here, and it's an old chart, but I just want you to show you how effectively this is applied in the older charts as well. We see prices here making lower lows on the big swings. Obviously, there's a multitude of smaller swings that contribute to these factors, but here we see an oversold scenario. Price retraces quite deep to 5,600 and then falls. It falls 1,000 pips, and even at its lowest point here, we're still in a state of divergence. We were in a state of divergence here, and we saw a price pullback, a generous price pullback, 250 pips, and then again price moved down, creating a more profound divergence. And this one in fact holds. We see a reversal pattern here and a sharp spike upwards, and a very generous trend of 1,400 pips kicking in. Watching your divergence on your higher time frames is very important, because they can lend to some very strong moves, some very large moves. However, it can take some time for the divergence to come to fruition. For example, this one took 3 or 4 days. This one took a couple of days, confirmed by a couple of days. And so you have to be willing to be patient with time in these scenarios. A very modest positive divergence on a 15-minute chart, and once again, as we see here, this is the low of a day, and then we see the following day price tries to move below this low, and price is in a state of divergence. But as price is retraced here, MACD starts to neutralize, and then it starts to kick in on the momentum of this downturn as we try to make new lows, but price never trades below, effectively below this low. And then as the traders failed to commit below these lows, then we saw a shift in sentiment and a shift in the foreign exchange flows to the bullish side, to the buy side, or to the bid side, and a very nice move and a very good move resulted from it. You will see this pattern over and over and over again, and it does not require a lot of sophisticated tools to make this trade. I wanted to show you this case because here we have the 200-day moving average, and we have a nice double bottom, tweezer bottom, and this is very distinct on the lower time frames. This low here, a very strong reversal low here on this daily chart. And if you see here, you see this low corresponds with the deepest low. Price comes down and makes a very aggressive move lower, but MACD still was unable to move below this low. We have this level of support at the 200-day moving average. So we're seeing both with price and with MACD, we're seeing a strong suggestion of a reversal. And again, it takes 2-3 days for this to come to fruition and offer a very generous move upwards. Again, this must be considered with other market factors. Here, the Canadian dollar moving in its typically characteristic choppy manner. Price making lower highs and lower lows, and we see a spike lower, while MACD was also making lower highs and lower lows with the trend, and ultimately with a low that corresponds with this low here. And in fact, this was an interesting tradable scenario. We saw a nice retracement, one more spike low. And often when you get this parabolic spike low, that can lend to a very good trade, because if this price moves fast and volume gets thinner or weaker with the speed of this move, so the faster it moves, the thinner and the weaker it gets, because flows get used up and they dry up, liquidity thins out. Then we see here price holds, and then we see a nice release in the selling and some buying pressure, as we see the corresponding characteristic of the MACD divergence.